People keep saying, in November 2025, the system will change. But what system? Who controls it? And does this have anything to do with XRP? Today, let's forget rumors and look at real documents, the ones with dates, signatures, and facts. Because this video is not about predictions or hype. It's about understanding what's actually happening behind the scenes. First, a quick rule. Stories are not the same as sources. A story is what people tell on social media. A source is a verified document, something from a bank, a regulator, or a public network. That's where the truth lives. So let's start with the basic idea. The world wants to make payments faster. Countries want their national payment systems to talk to each other. The goal isn't to choose one coin. The goal is to move money between countries quickly, cheaply, and transparently. At the same time, the language that banks use to send messages is changing. The old message format is being replaced by a new one that carries more data, less confusion, and better traceability. This isn't a magic switch that changes prices overnight. It's a technical update that makes global transactions smoother. Now, on the financial stability side, there's another reality. Liquidity, the ability to find cash fast, can disappear when it's needed the most. During stress, it becomes harder to sell bonds, harder to borrow short-term money, and currencies swing more violently. This isn't a conspiracy. It's just how systems behave under pressure. So what do the official documents actually say? They talk about upgrades to payment infrastructure and the fragile nature of liquidity. They do not say, this coin will be used on this date. They describe new rails, not a secret switch. Why does this matter? Because most cross-border payments today still rely on pre-funded accounts. A bank must hold money in another country before it can send a payment there. That money sits idle. It costs time and fees. The new idea is simple. Let every country's instant payment system connect with others. Sending money abroad should be as fast as sending a text message. When that happens, you get less waiting, fewer errors, and lower costs. That's why a richer and more structured message format matters. Each transaction carries detailed labeled information, customer details, reason for payment, even error codes. That makes compliance and auditing far easier. In Europe, they're already working on linking national instant payment systems across borders. So you have two things happening at the same time. Regional networks are expanding, and global bridges are being built. Think of it like replacing old plumbing. The old pipes are being removed, and new ones are being installed. Now, the big question, what will flow through those pipes? The answer is simple. Whatever moves money faster, cheaper, and more transparently will win. But what happens when stress hits? When economies slow down, everyone wants cash. Fewer people buy bonds, currencies fluctuate more, and short-term money becomes expensive. That's when old systems, the ones that hold money in advance, become painful. Real-time settlement stops being a luxury and becomes a necessity. When markets are fragile, fast and cheap wins every time. So where could XRP fit into this picture? In certain payment corridors, XRP could help reduce total cost and speed up transactions. That doesn't mean institutions are stacking coins. It means they might keep small working balances to process payments efficiently. The rule is simple. Lock up less capital, move more money, cut total cost. In the institutional world, stability and compliance are everything. That's why stablecoins with transparent reserves and legal clarity might also act as bridges. They provide a clean link between traditional currencies and new digital systems. So yes, two things are happening at once. The new infrastructure is being built, and legal, transparent tools are being developed to use it. This isn't a secret ceremony for one coin. It's convergence for efficiency, systems aligning because it saves time and money. Let's talk about XRP liquidity in a simple way. Imagine a lake with 3 layers. The surface is what's traded on exchanges, quick and visible. The middle layer is what's held temporarily for payments. The deep layer is long-term reserves that rarely move. If the middle and deep layers grow but total supply doesn't increase much, the surface becomes thinner. That means fewer coins are available for quick trading. When that happens, even small trades can cause bigger price swings. So, how can you tell if surface liquidity is shrinking? Ask yourself 3 simple questions. Are exchange balances dropping while institutional wallets grow? Are big off-exchange transactions taking longer to settle? And are futures prices staying higher than spot for an extended time? If all 3 are yes, liquidity might be tightening. And when liquidity tightens, price moves become sharper in both directions. Now, 2 possible paths lie ahead. The first is a smooth transition. The new message format goes live as planned. Instant payment systems connect gradually. Institutions slowly move from pre-funding to real-time solutions. XRP use quietly increases as a utility, not a headline. Prices might tighten, but nothing extreme. The second path is a stressful transition. Liquidity dries up, currencies swing harder. Short-term funding becomes expensive. Institutions rush to faster, cheaper solutions. Demand for instant liquidity spikes. Surface liquidity gets thinner, and price action turns sharper. This isn't prophecy, it's simple system mechanics. So what can you do? Instead of chasing rumors, build a small proof panel you check once a week. Spend 5 minutes and look at these 5 things. Are there new official updates about instant payment systems? Have migration dates or warnings been announced for the new message standard? Do financial reports mention liquidity stress or funding costs? Have institutions updated their reserve or transparency reports? And for XRP, check exchange reserves, futures versus spot, and order book depth. If you see movement in several of these areas, you're watching reality unfold, not hype. Always tag the data you see. If it's verified, it's real. If it's opinion, it's just a scenario. So, final thought. The phrase, "the system changes in November 2025, isn't about a secret button. It's about a long process, new pipes being connected after years of preparation. The old system hurts more each year it stays the same. The new one is faster, cheaper, and clearer. What's changing isn't a single coin. What's changing is the speed, cost, and transparency of money itself. If this explanation helped you, like the video and subscribe. And next time someone says, "This coin will hit this price on this date," just say one thing: show me the source.